And here we have a Forex. Okay, because the opening and closing are the same. On that second candle line, it's almost always going to be white. Now, you may have an occasion where that second candle opens a pip or two above the close of the first white candle, so it may actually be a black real body, but almost always white and doji. So let's look at some examples to make it a little easier to see. So this is an evening star. Okay, here's another one. And see, this is a little unusual because that evening star, normally that second real body and that red semicircle, the second real body is usually white. Okay? But in this case, it opened a couple of pips above the prior close, so that's why you have a black real body. Yes?
Wouldn't that second red top be a spinning top?
Yes, the second one would also be a spinning top. What else is it also? The second part of that evening star. Remember the single candlestick lines we talked about? Shooting star, right? And why was there resistance there? Bearish engulfing pattern, right? Exactly.
Can you go back to that first one? It didn't go halfway into the...
Right, it did not. That black real body in the blue semicircle area, see that black candle? That's what that blue horizontal line is, to show halfway into the white candle. Ideally, we want to see it close, that black real body close halfway or lower into the white candle. And that's what the blue horizontal line is about. It shows us it didn't close.
It's really close.
Yeah, it's real. I mean, right. If you don't want to be, and you could also view it maybe as a bearish engulfing pattern, right?
Yeah.
So if you did sell on this, let's say you sold short, say it's confirming a resistance area, and you sold on this, as soon as the market closed above it, if you're short, you're wrong, right? Okay, here it did close under the middle of the white candle. But getting back to how, even if it didn't close under the middle of the white candle, wouldn't that be a bearish engulfing pattern? Right? The black candle wrapped around. Remember, with the Forex, even if a black candle wraps around doji, it's still a bearish engulfing pattern. So that would be a bearish engulfing pattern, and it would have more negative implication as the resistance area if it also closed below the middle of the white candle. Because sometimes the middle of the white candle becomes support. As I mentioned before, it's not a major support area, but it's support. Question?
Whether it's a harami or a bearish engulfing pattern.
The question is if it breaks above the resistance area set by any of these candlestick signals, evening star, dark cloud cover, bearish engulfing pattern, do you go right into it? And the answer to that is you have to show me the chart. You have to see what the support level potentially is, what your target is.
Do you attach any strength to this breakout? There may be support and resistance levels. Like, suppose, for example, evening star is broken above.
Right.
And then there may be a resistance level there, but if the strength of the move is such that it will break that.
Okay, he's saying if it breaks above the high of the evening star's resistance, and let's say there's another resistance area right above that, there's no way to know if the market's going to take that second resistance area out. Okay, I can tell you where support and resistance is. In fact, that's what we do with our daily commentary, both our retail daily commentary and our institutional daily commentary. We'll give 3 levels of support and resistance. And the reason for that is because there's no way of knowing if the market's going to break support or resistance. But if it does break, let's say, a resistance area, I could tell you the next resistance area, and that would mean keep an eye out for any potential reversal signals with candles. But you can't tell how much the market's going to move by knowing what kind of candlestick signal it broke through.
Can I ask differently?
Okay, go ahead.
How much importance you attach to breaking a reversal pattern?
How much importance do I place on breaking reversal pattern? It depends on how often that reversal pattern was tested. If it was tested a lot of times, let's say a hammer was tested a few times, and the market breaks that support area, I would place a lot more emphasis on that. We'll look at old support becoming resistance than I would be if the market broke under a hammer support one time. So if it's tested more often, a break is more important, yes.
But on this chart here, then you would have said your resistance is at the top of the bearish engulfing.
Exactly. Right.
And you would have been taken out
No.
at that wide white candle.
Remember, when we talk about resistance, is the resistance based on an intraday move or a close? Close. So the market moved above the high of that upper shadow on that black candle, the bearish engulfing pattern, but didn't close above it. Right, didn't close above it.
But it might potentially take out your stop.
It might, yeah, intraday, you don't know if it's going to close above it or not. Right.
So with an intraday, you would have been stopped out.
Intraday, you would have been stopped out, yes. Right. And we'll look at setting risk-reward using intraday in a little bit. Okay, bearish engulfing pattern, which the evening star was also a bearish engulfing pattern, right? Remember the black candle wrapping around the white candles. Okay. Okay, and the market's at resistance here. Okay, would you sell short? Isn't the market at resistance? Okay. Okay. And why wouldn't you sell short? Right. The answer, and the correct answer is, there's no signal hinting the bears are losing steam. And this is a vital concept we're going to be looking at specifically in a little bit. Okay. It's not just if the market's at support or resistance, but what candlestick signals we get at support or resistance. No reversal signals here at all. Okay, I don't know what happened after, but the correct answer is I would not be selling here. Okay, here we have an evening star, and the reason I wanted to show this is that long black real body, and by the way, the evening stars are 3 candlestick signals on the left. That long black real body confirms the evening star, but look by the time you got the signal. Right. Now, we don't know if it's good risk-reward because I don't have something on the left side of the slide, but the odds are it's probably not a good risk-reward if you sell on the close of the shooting star. So what you do is you set up in your software a resistance area defined by the shooting star, and you have it give you an alert anytime the market's near there. And back in February, it got near there, and it wasn't quite a dark cloud cover. See, back in February, early February, long white candle, that black real body did not get more than halfway into the white real body. But what happened the next session? It did, right. So that, to me, would be confirmation of the, or I call it a variation of dark cloud cover. What's that? That second real, good question, is this an evening star where the market confirmed it in February? I would not view it that way because that real body is a little too big. You want the second real body.
What would you call it, a bearish Harami?
For a Harami, normally, I think the definition we actually have is like 25% of the real body. Okay. So if you want a definition, that would be it.
Are you thinking more in terms of a blended candle on those two black
Yeah,
candles?
yeah. The question is, we're thinking of a blended candle. That's something we're not getting into today, but there are ways to combine 2 or more candlestick signals to make it into a single candlestick signal, and then you read that individual candlestick line. Okay. Now, the Japanese have a wonderful expression that says, a workman must sharpen his tools if he's to do his work well. And now we're going to look at tools that we could be using to really focus on harnessing